So I never bought any cryptocurrencies till now, i.e. now it's 2020. What changed? Let's find out together. Hi, folks. So welcome to my podcast, The Way I See It, which is just me talking about money, personal finance, the economy, and then the intersect of all these together and how we can learn from it. Yeah. This week, I want to talk about cryptocurrencies, my journey from being a skeptic to an investor. So what happened? Well, let me give you guys a bit of a stat. So if an investor had bought 1 unit of Bitcoin by 9 a.m. on Thursday, the 26th of November, 2020, yeah? And then he sold that Bitcoin 3 a.m. December the 1st, 2020. His return in dollar terms would be $3,616. That's going to be about a 22% return for about 4 days, just 4 days. He could have lost it, but he made 22% in 4 days. So that's interesting. But over 5 years, Bitcoin as a unit of a cryptocurrency, yeah, has made a return of about 5,000%, not dollars, percent. So if someone had bought Bitcoin, a type of cryptocurrency, which is just like a digital currency, 5 years ago, he would be sitting on a 5,000% return today. That's huge. Let's compare that return with other asset classes. If you bought gold, let's say for the 20-year to date 2020, cryptocurrencies are doing about 166%. Gold is doing about 24%, US bonds about 7%, US stocks about 5%. Yeah. So you can see there's no comparison. If you do 5 years, cryptocurrencies win. You do year-to-date, cryptocurrencies win. You do short-term trading, cryptocurrencies win. And by cryptocurrencies, I'm referring to Bitcoin. So if I do interchange, that's just what I'm talking about. Yeah. So for all this time, even when I saw cryptocurrencies or Bitcoin go from um, 2000, 3000, 4, 5, 10, all the way to 19, I didn't invest in Bitcoin. Why? Because if you understand what's going on with Bitcoin, you would know that what's really going on is just what we call in finance the greater fool theory. And that's the real theory. And all it says is that Bitcoin's rise is not brought about by the returns or the margins or that kind of stuff. No, Bitcoin's rise is simply brought about by I selling to the next person and the next person offloading those same cryptocurrencies to the other person at a higher cost. So I buy at 1,000, I sell for 1,005. The person I sell to sells for 2,000. The person I buy it sells it for 3,000, and the price keeps on going up because everybody wants to get it. So if you buy today, you could sell tomorrow and pocket the chain. That's what's called the greater fool theory. It's moving across, not because of the returns or the inherent margins or the valuations. No, just demand. They just demand for it, and so the price starts to go up. Especially because with cryptocurrencies, especially with Bitcoin, supply is already fixed. So the basic law of economics says when demand goes up, supply then meets that demand and then brings the price down. But in Bitcoin's case, demand is going up. Supply cannot increase. Supply can only increase from what has already been mined or is available. But Bitcoin, the total number of Bitcoin that's going to be issued is already fixed. So it's like buying an island. You can buy plots in that island, but at the point, once you buy all the plots, the island is not going to increase. Then the price for plot then starts to go up in price because you can't add to the island. You can only resell what's already existing. That's basically how you want to look at Bitcoin. The price is going to keep on going up because supply cannot meet demand. But that's really, let's go back now and find out why did I start to buy Bitcoin. First, three issues happened. The first thing is even before COVID, Europe and parts of Asia were having negative rates. So what's going on is that Europe was experiencing slow economic growth. So the European Central Bank will say, hey, let's drop rates. So that way we can encourage banks to lend out funds. And when firms borrow funds from the banks, they have a lower interest cost. So that helps them to basically invest. It's less cost to invest, an incentive to get companies to come borrow and invest. So Europe was already at low or negative rates across the board. Yeah. Also with Japan. The US was the only place really you could get a lower but at least positive rate if you had dollar or you had fixed liquid cash to invest. So that was pre-COVID. What COVID then did was COVID made those low rates in quotes permanent for the medium term, the short to medium term. It then basically means no central bank is going to raise interest rates for the foreseeable future until COVID is gone, and at least till the companies then start to rebound with profits and margins and all that. So rates were down. COVID is going to keep those rates down even longer. And then number three, you then have the regulatory framework in the US. If you remember back in this year, Mark Zuckerberg, Facebook was trying to launch a digital currency called the Libra. Yeah. It didn't work out. He faced a lot of regulatory headwinds. He wasn't able to get that digital currency up and running. Right now, the environment for cryptocurrencies has improved. We have the US banks now being allowed to hold cryptocurrencies in custody function. So they can perform custody for cryptocurrency market. We even have the Department of Justice saying, yes, we have a framework for enforcement of digital coins and all. So these two are very, very good. It allows investors to read and say, well, ultimately it's going to be regulated because the US is already looking at them and putting out rules out there. So these three issues, if you summarize them, what it tells you is that number one, rates are going to be low if you're holding cash. And rates are going to be low for the medium term if you're holding cash. And that if you put the funds in cryptocurrencies, say in Bitcoin, it's not going to be illegal per se. The US is not going to come in and say, well, all that is illegal. It's allowable in quotes, as we'll see for now. If we look at what it was previously, there was a report done by Bloomberg where they said that only about, I think, less than 2% of transactions that were done on Bitcoin were actually commercial transactions. Right now, it's changing out. You see PayPal, for instance, saying that they might issue cards on their Venmo side, and that would allow you to do a transaction in the store with your card linked to your cryptocurrency wallet. So if you put all this together, what's happening is that cash that is sitting around can go to Bitcoin. And that because more people are coming to the Bitcoin market to try to enter into the Bitcoin market, demand is going to go up. If demand is going to go up, that means if you have your cash in Bitcoin, then the value or the price now, not even now, the price that people want to pay for that Bitcoin is going to go up. And then we're now giving a bit of regulatory clearance to say, hey, in the foreseeable future, this is not going to be a legal activity because the US is already looking at regulating it. This then started to give us a good picture of where we're going to with the market. Like I said, the whole idea is the greater fool theory. If you buy today, someone's going to buy from you tomorrow. And we've seen that people are going to keep buying Bitcoin because there's a lot of cash in the system. The central banks have put in a lot of money because of the COVID, and that cash has got to be invested somewhere. Gold is up, but it's only up, like we've said, about 20%. US bonds are coming up, but they're only up about 5%. So cryptocurrency simply because of the pool of new investors seeking where to put all that cash looks like it's going to have a good, I would say, run in the medium term. That's why I'm doing it. That's for me personally. So I'm trying to say, okay, if I have cash, I could put it in Bitcoin. And if the demand goes up and the price goes up, that's fine by me. But even if it doesn't go up, I can use or I can spend funds from my wallet in other places that were not possible. I don't have to go from Bitcoin to dollars and spend. I could go straight from the Bitcoin, my cryptocurrency that is, and simply spend. And so that gives me a bit of utility. So Bitcoin is now adding to me utility and a potential upswing in the price. That's why I'm basically now saying, okay, I'll give it a look and I'm going to invest weekly, maybe putting my funds in there to sit. Before I did Bitcoin, I had looked for a place I could pack foreign cash in terms of liquidity, getting access to it, and in terms of returns. I wasn't able to get any outlet where you could pack the funds, get liquidity, and get returns. I found where you could get liquidity, but you won't get the returns. I found where you could get the returns, but you won't get the liquidity. But with BTC and some Bitcoins, it allows me to basically have access to the funds, i.e. liquidity, and also get some returns, if you would call that price appreciation returns. So it looks like it's a good deal all in all. Again, I must warn you, what are the risks to this? The risks are everybody's coming in now, which means that you're going to have the big players. In this case, I mean the US federal government, basically saying, okay, we're going to issue our own Bitcoin. If the US government issues their own Bitcoin, what then happens is that it takes away the bulk of those conservative buyers that would have been in Bitcoin or other privately issued cryptocurrencies, and they may decide to simply invest in the US, say, Fed coin, just to get a cryptocurrency exposure. That would reduce demand on the Bitcoin and other cryptocurrencies, and then reduce this surge in prices. Remember, the surge in prices is because people are buying. It's not because of the inherent return or the intrinsic value of Bitcoin. It's really a supply deficient driven demand. There is no supply. So you see all the cryptocurrencies that are out there, they are trying to solve that supply problem by creating cryptocurrencies. But Bitcoin, that's not the first one that was created. The real issue is this: there's demand and supply is already fixed. So that means as long as demand continues, supply cannot meet that demand. Hence, the price is going to go up. All right, guys, so we'll stop it here. I just want to use that as an idea to talk about cryptocurrencies comparing with other assets. Remember, all I've said today is not advice. It's not financial advice. It's not a recommendation to buy or sell. If you want to buy or sell, make sure you consult your financial advisor and understand the risks before you invest money. Past performance is not a guarantee for future performance. Yeah. To keep following us, keep sharing the podcast, subscribe, share, tell your friends. I do appreciate it. Hit me back on Twitter, FinPlanCarloAjo1. That's FinPlanCarloAjo1. I'll see you guys next time, right? Have a good day. Bye.